This is the Energizing India podcast.
On the show, we very rarely have the same guest visit twice. Today, we talk to a very special person who is coming on the show for the third time. We speak with none other than Vasudha Madhavan, CEO and founder of Ostara Advisors, an investment banker that helps facilitate investment as well as M&A transactions in the electric vehicle space. Vasudha, welcome to the program.
Thank you so much, Ravan, for having me here for the third time.
You've absolutely broken record, Vasudha, because the only other company that's come on twice is MG, and now we're going to have to get them back just to keep up with you. Vasudha, your business advises and specializes in advising people in generating funding in the electric vehicles and energy transition sector. You've done some very big deals, including the Ampere deal. You are a well sought out advisor in this space by young startups, particularly in South India. When you were here previously, we talked about the different deals that have been happening. It's been 1 year since you've been on the show. I'm interested, what's happened from January to September 2023 in the business, in funding of startups in the EV sector?
Yeah, no, I think we've really grown into the space now where we are sort of the whole specialization that we started off with is becoming so much relevant because there is a domain around this, and there is a very interconnected ecosystem in EVs, and that's becoming more and more specialized. And what we are also on the mission, of course, just as a background, the reason why I did what I did, building this organization for so many years, is to get investors that understand it, and this requires a unique class of investors to back it, and that is important. And that is also why and I'll answer your question around what has happened. That's also the reason why this is happening, is that investors have finally started to look at it with more knowledgeable eyes. They've started to engage with it in the way that it should be engaged with, and they've sort of started to understand the various parts of this ecosystem, and not everything is software and not everything is SaaS, right? And so therefore it needs a different approach. It needs you to understand that. So as a result, I think we've seen when we met, I think it was March or Jan, I don't know when we met last, but we spoke about how the last 2 years have been, and the last 2 years have been higher flows of funding than any other year before that, and in fact collectively all years before that. So therefore that trend continues, and that we are in so-called funding winter in the venture capital ecosystem, especially in the US. But climate, I would dare say, has beaten the trend, right? And that's because climate tech, or climate including EVs, is the biggest thing. And it's great that businesses are able to make it is profit with purpose, right? And that is where an investor should back that, and they are backing it. Has it been as high velocity as it should be? Probably not, but we'll get there. It has been a relatively slow year in terms of a number of deals, etc. But there have been deals, and that's good. So just to summarize how Jan to August, so my team tracks this every month, every day. We track the number of deals we do. There are deals happening, some which we have advised, many that we haven't advised, but there are plenty of deals that are even happening inbound. And so Jan to August of 2023 has seen a total deal volume of about 1.16 billion.
I was going to say, it sounded like a small number.
Committed, not including M&A deals, but also including committed amounts but not invested amounts. So 1.16 billion committed will play out over, in some cases, like the largest such commitment was the 217 million or so, which was talked about in the Sun Mobility transaction, and that on the IOC piece, and that will play out over a period of time. There have been similar commitments also with Ola and also with some of the other companies, parts of which have come in, and we've tried to see where we can take the amounts that are actually invested But also in some cases we've taken committed amount. So that's the sort of total number. The share of OEMs is about 39% of this number. So that's broadly the lay of the land of VC funding, and some bit of debt as well. So this includes debt and
So what's interesting is it's still in some ways the larger end of town. When you talk about Olas and its OEMs, and Sun Mobility almost sat out there like the outlier.
Yeah.
What about the younger, smaller startups with some very cool ideas when it comes to BMS, battery technology, maybe electric vehicle drivetrain technology? What sort of stuff is happening in that kind of space? The ticket sizes you're talking about are 200. What's happening in the $2 to $10 million ticket size?
I think what we've seen is the Indian early stage venture ecosystem, and there are several of those funds, but a few specialized ones that have taken several early bets. Everybody from MyCellU to Climate Angels to Bloom Ventures to Bearing, who have all done these deals. So I think there are a decent number of early stage VC investors that have taken those early bets in the last 2 to 3 years. So some of those deals have been happening. And this year also, as a trend, I would say this year saw fewer of those very early stage deals. But there were some 3, 4, 5 million kind of deals. But we have also interestingly seen a few Series B transactions. And that means that truly the ecosystem is maturing. Investors believe there is scale. So a lot of these deals are done on the basis of potential revenues and potential scale. So they believe that there is going to be scale. And also they believe there are founders and businesses that are being built for that scale. So that is being backed by equity. What at Ostara we are very passionate about, we're truly passionate about, is that early stage is great. We need a lot of early stage activity. We need many more 2 million, 3 million, 4 million than have actually happened. But we also need to be ready for the really larger tickets, right? And which means we need to have the global investors engaged and ready and be tracking this ecosystem. So we do a lot of work in evangelizing the space to global investors. And that, I believe, is critical to building the next phase of growth. And capital is essential to that. And and often these global investors bring in not just capital, but strategy, and know-how, and global connects, and global exposure, and market exposure. So all of that is also going to be very important for our ecosystem to scale.
So the funding winter that you refer to, which we're all experiencing in many ways, the companies that had their Series A and are now experiencing the funding winter and are faced with investment or investors who didn't quite necessarily know what they were investing in, expecting SaaS revenue or software revenue, unable to put in more money, cash runway starting to look a little bit tight. What's happening to such companies in this space in the last 6 months?
Well, it is true that if you are not an incumbent and you don't have large piles of cash or internal accrual sources of capital that you can just dig into, you are going to be very fundraise dependent. You're going to be very investment dependent. And that's just how we've seen, very vibrant ecosystems like in the Valley have grown like that. Great companies have grown like that. So we believe that will happen. There have been very tough phases. Specifically, I can say that one of the main sources of this kind of stress for startups, more even than the funding winter, has been the recent reduction in EV subsidy for two-wheelers. And that, I think, has impacted several businesses that are dependent on two-wheeler growth. There are the big companies have had dip in their sales as a result. The battery suppliers, the BMS suppliers, all of the ecosystem, many of whom would be startups, have also seen a slowdown, including distribution and sales startups that are sort of working on this. But do we need those startups? Very much, we do. We need them to survive. We need them to be funded. We need them to grow. They are building solutions unique to the EV ecosystem, and that's very important, and they need to. But they have gone through, and it is unfortunately likely that some of them will not survive or would have seen very tough times. But I hope and we hope that they can weather through this, because I think the coming year should definitely be better, and I think sales are already picking up in India, and it was a temporary blip. So I think that part, I think the pain should reduce with time.
One of the things that I scratch my head about is the continued launches of startups in the two-wheeler EV sector. I would have expected that by now there should be some fatigue. And maybe I'm looking at it from the traditional Indian economy, where we've had 3.5 or 4.5 of everything. 3.5 airlines, 3.5 telecom companies, and suddenly we went from 3.5 two-wheeler companies to 30, and there's still people looking for funding in this space. Do you think that there's going to be some fatigue if you don't have something incredibly unique anymore in this space to be a scooter, motorcycle, or a three-wheeler electric vehicles?
No, I can speak about each of those. I think in two-wheelers, definitely the scooter market has been overcrowded with a lot of players. We saw players of varying quality, from initial players who just brought in kits from China and sold it, to those that started to innovate or make parts of it themselves, to those that assembled it in India with some Indian contract suppliers, etc. The key thing there is, in any of these vehicle types, is that you need to have some control on the tech yourself. You need to have very high control on your supply chain. And a lot of the startups don't understand this immediately. They are all about, okay, either let's get a quick brand out into the market, or let's get some, let's work on our R&D, and our R&D is the best. Either way, you are going to have to face the market realities, and those include supply chain and distribution and all of that. So how do you solve for that while keeping tech and product in mind and at the core of your solution is very critical. So I think that part also, because India is a vast price sensitive, cost sensitive market, it has in a way quality has also of course been important because of battery fires, regulation, consumers going towards the better quality products. That shift I think has happened. So there has been a bit of a shakeout. We do see the clear winners emerging in the two-wheeler scooter market, and I believe that anybody new, for them to enter, they're going to need capital. They're going to need significant capital to back them, and they need to have figured out supply chain, distribution, and we will see a few of those names also coming up with capital and all these other things. Maybe old economy, maybe new economy. So that is one part. The motorcycle part, however, has remained fairly, and we wrote about it last month. We wrote about how the motorcycle market is so much more attractive in such a large space, but because it presents an engineering challenge, R&D challenge, there aren't enough players. And this is a very, very interesting white space opportunity for India, and there are players again emerging. In general, these guys will probably need strategic capital, because to build an OEM from scratch is not easy, and many of them are completely first-time startups, and that's going to need capital support, everything that they can get, every support that they can get. So that is a huge market. There's going to be likely investments, venture and strategic in that space. Scooters, yes, I agree that you need to have a very good value prop to come in now.
In terms of the evolution of the sector as a whole, we've also seen some, for want of another word or better word, exits, where early founders or companies that came up with the idea have decided to divest to larger businesses. Even in the fast charger business, we've had one company being acquired by a large European competitor, and in the other and another large charging company or charger manufacturer being divesting a significant equity proportion to one of the large OEMs, vehicle OEMs. So it does seem like it's heading to where the idea got you to a point, and now there's going to be a significant requirement for funding or technology or all sorts of other stamina that is required to stay relevant in the market, and therefore there's these sorts of investments or divestments that you're seeing take place. Do you think that will happen right across the value chain, where the early founders are now at the point of going, okay, I think this is better with somebody else?
So I see this slightly differently. Founders, there are a whole range of them. The whole EV transition in our country has been led by founders, has been led by the startups, right? So pretty much they are the ones that have done it. I see this as more a demand pull sort of thing for acquisitions than in the sense that there are companies which are incumbents in various industries, whether they're oil and gas or they're automotive or they're components or they're so many different industries that get impacted by this transition, all of whom are looking for interesting captive R&D, interesting captive tech, interesting captive solutions, right? And captive being the operative word, right? So therefore, we will continue to see that sort of a focus. So almost in every, you can say in every major venture funding that happens, it's likely there is a strategic alternative available, right? And so how well can you structure that venture funding round to be able to make sure that the company meets its growth goals, right? In a way, it can be about the founder's own fatigue, having built it over years, and that's a very personal decision to make, and that can often, and that's probably anecdotal. It's less of a trend than it is anecdotal, but definitely there's a trend that strategics are interested, and they're interested in various forms, including acquisitions. Many of them are investing as corporate venture funds, as LPs into other funds that are looking for these startups and so on. That I think is a good thing, because it creates a breadth of capital available.
So talking about strategic investments and being likely the next wave, more than VC, because the VCs are taking a backseat through this funding winter. What are you prognosing over the next 12 months, Vasudha, in the space of investment and mergers and acquisition in our sector?
Yeah, I actually believe that we will see more growth. We will see more venture capital. We will see more investments. There will be, I think strategics would wait for a little bit of scale. If there is capital flowing into the country, they will see scale and they will see more proof before they will make those acquisitions. But I expect next year to be much busier, many more startups to raise a Series B, C fundings, and also for strategics to come in.
Obviously, B and C investment territory that we are in the next 12 months. Are there any tech sectors within the EV and energy transition sector that you're looking at right now that are starting to pique your appetite, so to speak?
Yeah, I think I see last year when we looked at the landscape, we saw a lot of OEM investments. We will see probably hydrogen a little later, but definitely for now everybody's working at batteries for energy storage, and how do we solve for that, alternate battery technologies, things like that. So I think that will be a core source of, I would say, scale up investments. Innovation still happening including in hydrogen. How do we make it more viable? Also in software technologies related to electric vehicles, related to how do we assess the battery, how do we assess vehicle risk, and so on. I think these are areas where it can be very much more tech focused. Also rapid charging, quick charging, these are areas where we are seeing some early stage investments. So I think these will continue to be the trends. OEMs, I guess there are some big boys, and then there'll be hopefully a few motorcycle, and these areas will get some funding in the year to come.
So we had an hydrogen expert on the show last week, and a very interesting comment he made was hydrogen at the moment exists on Twitter because everyone's making announcements but nobody's really putting money down. So it's interesting to hear you say that you will see some hydrogen investments over the next 12 months.
A little later, I said.
Vasudha, it's always a pleasure to have you on the show. Thank you for having made the time to come all the way from Bangalore to the Artemis studio.
Sorry about my scratchy throat.
That's all right. I think it happens when you fly a lot. But thank you for having made the time.
Thanks, Ravin. Thanks, guys, for having me again.